2024 is upon us. Now is the time to make decisions for 2023's crop and protect this spring's investment. Let Advanced Trading help you create a marketing strategy to protect your investment and reduce market risk. For over 40 years, Advanced Trading's non-predictive approach has helped farmers secure and extend profits, regardless of market volatility. Our team is ready to help you tackle 2024's uncertainties. You never stop working, and neither do we.
Good morning. Nate Durako with Advanced Trading. I've got Brian Basting and Jeremy Strubhar with me today. We're going to highlight some of the USDA WASDE that just came out, a little bit of the market reaction, and talk through what we're looking at going forward. So jump right into it. Thanks for the time, guys. Brian, what did we see today in the USDA report, specifically corn and bean yields, and maybe then a little bit of the South American numbers? As expected, a little bit of a surprise?
Yeah, I think you hit the nail on the head, Nate. A little bit of a surprise, although from the reports we've been hearing from the country, maybe not a huge surprise in that the corn yield was bigger than expected. Trade was expecting barely no change from what it was back in October, but it jumped up to 174.9. That was near the top end of the range of the analyst estimates. Record yields out in the east. Indiana, Ohio, some stellar results out there, and Illinois was bumped up this month, 3 bushels per acre. And some minor increases elsewhere, but the results really did confirm what the combines have been telling us. This crop has surprised us to the upside. Beans, 0.3 of a bushel higher, Nate, 49.9. Again, a bit of a surprise. The trade was looking for unchanged. So both the beans and the corn, yield-wise, were above expectations. Strongest yields, again, being seen in that eastern corn belt. But some of the central belt and even the west, for as little rain as they had, surprised us in terms of the volume. So South America, Nate, the biggest confirmation that we received was that the Brazilian crop was larger than what the USDA thought earlier. And we kind of had a feeling that was true because the export lineup continued to be stout all summer and early fall from Brazil. USDA increased the size of the Brazilian crop 2 million tons from what it was back in October. So that really confirmed that they had more available supply, and they've really been aggressively shipping out those beans much longer and much larger quantities than we expected. But this confirms the reason was the crop is bigger than we thought it was. Elsewhere, no change in the projections for this year's crop, Nate, the crop you're planting now, or last year's corn crop. No changes in Brazil or Argentina. No changes in last year's export forecast for Brazil and the crop that they're exporting now.
Okay, yeah, and maybe touch a little bit more on that. I think one of the points you made on harvest data that we had seen, a lot of people were referencing the September to October changes in corn yield, and unlikely or potentially unlikely to see that from a historic perspective into this November report. But when the harvest really started rolling, it was a little bit more delayed, especially in the east. So is that maybe one of the reasons we're seeing the USDA make the change? And I have had more comments on the longer tail in the central belt, just a lot more came to town than expected. Especially when you, like you said, when you talk about the dry patch we had, especially in Illinois, the first part of the market year. Seemed to finish well, maybe add a little test weight there into the fill, and end up being a good crop. We're market reaction the last couple of days on some of the ongoing issues in Brazil. We've got dry, hot, central Brazil, wet, southern Brazil. Were you surprised to see the USDA keep the bean yield and corn yields unchanged for the upcoming marketing year on soybeans and corn, or was it maybe too early to make that determination if it's going to really be a risk?
I guess I'd say historically, Nate, USDA tends to be conservative. We're only in the first week of November, barely into the second week in November. Historically, they're going to take a patient approach and see how things evolve. I would say that December would be a prime candidate for some tweaking of those numbers. Because at that point, we're definitely into the pod set and pod fill stage for Brazilian beans. So that'll be something, these next 30 days will be very important. But no, I wasn't that surprised that they took the conservative approach, particularly on corn, Nate. About 80% of the Brazilian corn crop is going to be the double crop corn. And that's the corn that's going to be planted in February primarily of next year. And at this point, there are some concerns that that crop could be planted later than desired in terms of the dry season starting earlier than normal and so on and so forth. But for now, I think USDA took the conservative path. This December report could be very important as we look at this weather the next 30 days, Nate. And I'd say moving back a second, you articulated well, I think, what's transpired here in the U.S. We had very small percentage of that eastern crop harvested, and we didn't have much crop harvested north of I-80 in some cases.
Right.
When the USDA took that survey at the end of September and the first few days of October, and all those bushels now, as you said, really came in better than expected. I'd credit, obviously, our tremendous producers out there in the country, but also genetics this year, Nate. Very strong.
Good, thank you. Jeremy, kind of given the base of that, it feels like we've got a lot of stuff, a little bit more confirmation, not that we can't see an adjustment still to the final crop size, but pretty well through harvest. We got a lot of stuff out there. Feels like a little heavier tone on the bearish side here for the report today. We're watching South America, but when we talk about the U.S. producer, one of the focuses on the commercial side this year has been what felt like below average farmer selling, coming off 3 years of high prices. You know, producer not real happy with current prices. You know, for a while there, maybe it was production risk. Insurance price was pretty solid this year. Now we kind of fast forward to the end of harvest. What are you seeing from the producer mindset that, you know, guys you work with or in general on where they're sold, maybe some alternatives to just putting corn on storage and hoping for some higher prices now that we've checked a few more of these boxes that maybe take a little bit of the bullish steam out of that upside?
Well, yeah, great questions, Nate. One thing you did not mention was the cost of planting this crop. I have guys who have break-even prices between $900 and $1,200 for the corn that is coming out. And the current price and the current yield they had, and they're barely making any money. So they are putting it in the bin, blindly hoping for higher prices. Those may or may not come. South America will be a major piece in that.
Sure.
But for now, it appears that a lot of guys will be underwater for the 2023 crop. But as we look ahead, and that does not mean we should just put it in storage and forget about it and hope.
Right.
If it's going to town, let's run the numbers, comparing the cost of storage, the extra shrink, and more importantly in this year than any year in the recent past, the cost of your money. Add all those up and see what it's really going to cost us to own that corn. In many cases, it makes more sense to sell it and buy a call and talk to your advisor if that should be in the March, the May, or in the July, or in some cases even further out. If you have your corn on farm, don't just put it in the bin and close in the bin door either. Currently, there's a 32.5-cent carry out to July. If you consider the interest between now and July 1st, we're looking at somewhere around 25 cents in interest. If you're borrowing money, that eats up the majority of that carry return.
Not a lot of return, yeah.
No, so let's not get married to it. Locally, the basis has gone from approximately 20 under at gut slot harvest to currently 10 to 12 over at our big processor here in central Illinois. That's a pretty good bump up. With the big crop, it does not need to get to work out in the past couple of years. Don't mark on this crop like we did in the past couple and wait for that 20 to 30 over, and that may not come.
Yeah, no, I think the interest is something to continue to highlight. Obviously, the input cost for this last crop that they just harvested and kind of seeing those prices come down. Many of them have locked in some inputs for the upcoming season, upcoming 24 crop as they're wrapping up, doing field work. Just kind of a combo of, you know, on paper, what we got confirmed today, are we starting to see this U.S. stocks build? We're watching Brazil closely, but are we starting to get back into that potential trend of U.S. residual supplier where we don't see as much volatility in these markets? You know, we're fighting a little bit for exports. They increased exports today, 50, maybe a surprise to some of us given pace year to date outside of Mexico, which has been a positive. But increased ethanol more in line with where we're at. But we're almost making an assumption that we're going to price ourselves back into some demand long term. Big carry out on paper next year if you use a 92 million acre type number. I think the returns are maybe a little more favorable for beans, But when do you think the farmer should start focusing on that 24-25 crop? If he's maybe not sold up on the current crop or looking at below break even, don't let him get in a tunnel. What's kind of your advice on how to market your old and new crop? Do you do one at a time? Do you start to have some targets?
Now, as you highlighted, as we talked earlier, there's carry in the market. So December of 24 is considerably higher than December 23. I forget the exact number today, somewhere in the neighborhood of 35, I believe.
Okay.
If nothing changes, that December 24 will come down to where our December 23 is. We all know things will change, but we have that price risk. So with that and a large carryout, absolutely we need to be looking at pricing or protecting some of that crop we intend to grow. You asked or mentioned the cost of production. My rough numbers right now show approximately a $100 higher return for soybeans for 24 than corn locally in our Illinois market. That can change, but as a lot of anhydrous is going on, I may hold back and keep a few of those acres back to possibly go to beans if the market continues to say that's the way we should go.
Good stuff. Thank you. Brian, shifting away from corn and beans for a second here, any big takeaways on the wheat balance sheet, both U.S. and domestic, and then kind of what are we looking at as some volatility in weather patterns we're watching, maybe a little bit of asking a lot of questions, but I know the delayed or slower harvest in the east has got a lot talking about potential upcoming soft red wheat acres. Did any numbers you saw today feel like we're going to trend towards a tighter SRW balance sheet in the next marketing year, or kind of what was your high-level takeaway?
I guess I'd start, pardon me, I'd start first of all, Nate, saying that the USDA today bumped up the Russian crop 5 million tons. They did not change the Russian exports, but it obviously gave on the balance sheet a bigger cushion in terms of carry-out supply for Russia. How they're going to proceed the second half of the marketing year will be critical, but you can conclude from that is that we're in a fierce export competitive environment here in the U.S. As you mentioned earlier with your conversation with Jeremy, we are the residual supplier in wheat now to the world. The one exception is to keep an eye on soft red winter in the context of China. If China were to come in here because of their poor quality crop that they harvested earlier this summer and maybe make some more purchases of SRW, that's a wild card. But besides that, we are in a fierce competitive environment. They did lower the Argentina crop 1.5 million tons today down to 15.
Expected, right?
It was expected, and they left Australia unchanged. So, you know, for a while there, people were saying Australia could be closer to 20. Now it's 24.5. So the bottom line for this old crop is very competitive export environment. A struggle. The market's searching for demand right now. There's no other way to say it. How can we get more demand? And the only way the market does that is to lower the flat price, and we've seen that. You raised a very good point, though, on 24, 25. We did not get all our intended soft red winter acreage planted, Nate, in the Eastern Corn Belt. The soybean harvest was much later than expected. Michigan, Indiana, Ohio, I'd stretch that up into Ontario, Canada. We're going to have anywhere from 20 to 25%, some people are saying 30% decline from a year ago in terms of soft red acreage. What does that mean? 24, 25 balance sheet, Nate. We've had some stellar soft red winter yields the last 3-4 years. 70 nationwide, 70, 75. There were some reports of 100 bushel or higher bushel wheat yields in the Midwest this year. Having said all that, if we trend back that yield just a bit with lower acreage, all of a sudden that 24, 25 balance sheet does have that potential to tighten. And I know in terms of the big carries that are being seen out now, the VSR has been activated, of course. Those things are important to look at from a commercial standpoint. I defer to you, of course, on that. But the 24-25 balance sheet on soft red could look a lot different. All we can say for now is that we did not get all our intended soft red wheat acreage planted in the Midwest this summer. I do think out west, though, Nate, we probably planted a bit more HRW than we did a year ago out in Kansas, Oklahoma. Not a lot, maybe 2 to 3% more than we did a year ago. So if we're looking at a 24-25 balance sheet for HRW, if we can hopefully bounce back to a trend yield out there, it's a much different balance sheet for HRW than this tight balance sheet that we're looking at, tight production that we've seen, I should say, the last 2 years. So we'll cross each bridge as we get there. The most important thing now is to see what the export demand does. If we can get any additional export demand from the producer side from China, Otherwise, Nate, the market's searching for demand, and it's a grind lower, if you will, in that flat price. There's always surprises out there. The Black Sea at the top of the list.
Right.
We saw what happened on Wednesday this week with just one uncertain event that happened in the Black Sea. The market's up 25 cents. Now backed off again since then. But a lot of variables out there to keep our eye on. Bottom line, though, is wheat supplies for now are comfortable.
Thank you. Yeah, this searching for demand theme, just again kind of reiterating confirmation today that there's stuff out there. I think confirmation that we're going to have to continue to fight for export demand, which feels like really what shifts the balance sheet in any classes. You know, our ethanol is going to continue to run. We've had some profitable levels there. They've come off the highs. We know the soybean crushing margin has been a big conversation in the last couple of years as we've seen that build out, but feels like the demand for those is I want to say maxed, but we're throwing pretty big numbers out there. So to really change our balance sheet for the current marketing year, given what maybe was confirmed in the yields today, feels like it comes from that export demand. And you know, I hate to say that only focus comes from South American production, but it sure feels like right now we put the U.S. number behind us. We got a lot of stuff. We focus weather the next couple months here on South America as we watch some Chinese buy-in. I mean, Jeremy, what are you watching for maybe opportunities for pricing from producers as you talk through that break even? Is it, hey, let's see what we get to for the January report? Is it have targets in? Is it what's your flavor for farmer marketing right now?
Well, as much as we hate to say it, the market doesn't care if you make money. The market's going to be what the fair price of corn or beans or wheat should be. And given that, and the price we have today in most cases should be above break even for 2024, 2023 is going to be a bit below. I think we just need to act now by making a sale, buying a call, or buying some puts to protect our downside. We don't know what the weather is going to do in South America, and this could be in the highest price we see from here until a couple of years.
We get back into that residual supply. Is there a specific, I always ask this from our farmer marketing guys, I mean, from a timing calendar year, kind of given this fundamental foundation we're talking about, I don't want to say, you know, volatility and $7 corn is we're not going to see anytime soon, right? But do you feel like there's more advantage in trying to capture upside through a specific, do you want March calls to get through the South American next couple months of volatility? Do you like May to kind of get through that and planting indications? Do you like to scatter them, or is there a specific focus on one or the other?
And there's no right answer, and every advisor has different recommendations. I've been pushing a lot of mine out to July just because it's hard to want to roll in that March if nothing happens between now and the end of February. Yep. And I want to have that ownership through in the South American crop to see what kind of crop they have come June when that July would expire. That also gets us through in the U.S. planting season. So I like having the time. If you buy March, there's nothing wrong with that. You're going to save some money. But if you do, I strongly encourage you to go into it knowing that you should roll it out when the time comes.
Good. Appreciate it. Brian, any closing remarks on what we're watching for next outside of the weather? Does it feel like we're just in a holiday mode here, or what do you feel like the next kind of big market move potential is?
I think you set the table as such a moment ago, Nate, talking about some factors looking ahead. I think we got to put at the top of the list now, are these lower prices for corn going to get the export demand revved up as such? We're seeing a lot of soybean sales being announced now, daily soybean sales. Now, some of that, I'd remind the viewers, is catch-up buying. For example, China has been coming in here aggressively and buying beans, but they were way behind in terms of their forward purchases on U.S.
South
beans.
American competition that you noted, right?
They rode that horse, as it were, all the way, all the way. They bought every single bushel they could from Brazil. Now they're looking at obviously the U.S. is in the driver's seat for the short term in terms of getting those bushels sold to China. I'd remind viewers, though, that USDA came out today and said for next year, China is going to import unchanged. From actually, it's a tad lower at 100 million tons compared to 100.85 million tons. So what I remind the viewers is, it seems like every year that Chinese import demand has been increasing. Now it's kind of leveling off. So just be careful in terms of saying, well, China's going to come in here. You know, maybe their crush margins are not that favorable in China. Maybe the hog market declines in China, but be careful of that in terms of demand. The other thing you highlighted a moment ago, Nate, is spot on, South American weather. We've really got to keep an eye on that. The next, I'd say between now and Christmas is very critical for those Brazilian beans in the north as they set pods and fill pods. It's dry up there right now. They need some rain in southern northern Brazil. Having said that, it does tend to rain more seasonally as we get into November and December. You know, it's a balancing act between the El Nino weather pattern that's in place, which does tend to be dryness in northern Brazil, and the fact that seasonally there's just a rainy season. So can the rain break through? We don't think about that in the U.S. here, but we got to think about that this year as the holidays approach, because the bean market is strong right now, and the meal market's setting contract highs. So I'd say those factors, Nate, are these prices going to continue to encourage, or will they encourage, I should say, more buying of corn in the U.S. here? And will the South American weather change? Right now, there's probably some type of premium in that soybean market for what's going on in South America. I can't quantify that, but in terms of looking ahead now, I think now that our harvest is wrapped up, Jeremy did a terrific job. What are we going to do with this 23 crop that we've just finished harvesting? And then it's not too early, as Jeremy said, to think about 24. It's still 4 months, I think, Jeremy, before we set the insurance price for next year, till the end of February next year. Yeah. So there's a big window there. And I think Jeremy did a terrific job of saying, let's seize the moment there. Let's look at some alternatives, not only for managing our 23 bushels, but also looking ahead to 24.
Mm-hmm.
Good stuff, gentlemen. I appreciate the time today. Viewers, thank you as well. Tune in to ATI's YouTube channel if you want to hear more marketing updates, and appreciate it. Thank you.